What would you do if your income suddenly dropped, but your bills stayed the same? It's an uncomfortable thought, but preparing for a recession is about taking control, not living in fear. While recessions can impact jobs, savings, and businesses, early preparation can make all the difference. By getting ahead of the curve, you will reduce the financial stress that comes with uncertainty and build more confidence in your future. In this video, we'll cover 8 simple ways to prepare for a financial recession. Steps you can take today to secure your future, no matter what the economy does. Are you ready to prepare? Let's dive in. 1. Build a high-yield cash reserve. In normal times, it's common advice to build an emergency fund that covers 3 to 6 months of living expenses. But during a recession, liquidity is even more crucial. You need to be able to access your savings quickly without worrying about market fluctuations. That's why moving your emergency savings into a high-yield savings account, HYSA, is a smart move. Not only does it keep your money accessible, but also earns more interest than a regular checking account, giving your savings a little extra boost without the risk. Your emergency fund isn't for vacations or big purchases. It's for real emergencies like job loss, unexpected medical bills, or an urgent home repair. So the key here is to keep it safe, accessible, and separate from your everyday spending. If you don't have a full emergency fund yet, start small. Even a little goes a long way when you're building financial resilience. The peace of mind that comes with knowing you can cover your bills, no matter what happens, is priceless. Set up automatic transfers so you can build this fund without having to think about it too much. Over time, this habit can create a solid financial foundation. 2. Create a survival budget. A lot of people know their regular monthly budget, but during a recession, you may need to cut back on non-essential expenses to make sure you can survive on a smaller income. A survival budget is exactly what it sounds like. It focuses on the bare essentials. Think housing, utilities, food, insurance, and transportation. These are the things that keep you safe and functioning. Everything else can be adjusted or put on hold. This budget is powerful because it gives you clarity. It helps you understand how long your savings will last and how much you can cut back if your income drops. For example, if your regular expenses are $3,000 a month, but your survival budget is only $1,800, you've got a clear picture of where to make cuts. This gives you confidence and control if the unexpected happens. Once you know your basic survival budget, you'll also feel more empowered to make adjustments in the short term. Cutting back now while you still have a steady income can help you avoid the stress of scrambling when times get tougher. By planning ahead, you can feel more in control and less anxious about what's coming. Plus, it can help you save extra money that can be put directly into your emergency fund or used to pay off debt. 3. Pay down variable rate debt. Now let's talk about debt. During a recession, interest rates can fluctuate, and if you have variable rate debt like credit cards or personal lines of credit, your monthly payments could rise when rates increase. That's why it's a good idea to prioritize paying down this type of debt as quickly as possible. The less you owe on high-interest debt, the less pressure you'll feel if interest rates start to climb. Focus on paying off credit cards, personal loans, and any other debt tied to variable rates. Start with the highest interest debt first, and use extra payments to pay it down faster. The more you reduce your debt, the more financial flexibility you gain. 4. Build multiple income streams. Relying on one paycheck can be risky, especially during tough times. So, building multiple streams of income can make a big difference. Start by monetizing the skills you already have. Offer freelance services, start a small side business, or explore digital content like blogging, YouTube, or selling online. Even reselling and used items around your home can bring in some extra cash. Having more than one source of income reduces the stress of relying on just one paycheck. It can also help you build financial stability when your main source of income feels uncertain. Don't be intimidated by the idea of a side hustle. It doesn't have to be a huge commitment. Start small by using a few hours each week to build something on the side. You might be surprised by how quickly those small efforts can grow. Having multiple income streams doesn't mean you need to quit your day job. It means you have options. And having options gives you more control when the economy slows down. 5. Cut recurring subscriptions. You know those small subscriptions that pop up every month? Streaming services, app memberships, gym fees? Subscription creep can quietly drain your bank account, especially if you're not using those services regularly. Take an afternoon to audit all your recurring expenses. If you're paying for things you're not using, cancel them. It's easy to overlook those small charges, but they can add up to hundreds of dollars a year. By cutting back on unnecessary subscriptions, you can free up money that can go toward building your emergency fund or paying down debt. It's a small change with a big impact. Look at everything that comes out of your account each month. Streaming services, gym memberships, online apps, and software subscriptions might not seem like much individually, but they can quickly add up to a significant amount. Cutting subscriptions also brings awareness to where your money is going. Taking action now will put you in a much stronger position when times get tough. 6. Focus on valuable skills. Focus on learning valuable skills that are in demand, such as data analysis, project management, or tech-related skills like AI and machine learning. These are the types of skills that can help companies save money and increase efficiency, which makes you more valuable in the workplace. Invest in yourself by taking courses, learning new tools, or gaining certifications that make you more marketable. A skill set that helps you stand out can give you a competitive advantage, especially in a shrinking job market. Learning new skills doesn't have to be overwhelming. There are countless online resources, free courses, and affordable options to help you boost your knowledge. Start with a small, manageable goal and build from there. 7. Avoid panic selling investments. When the market dips, it's natural to feel nervous about your investments. But panic selling your investments is one of the worst things you can do during a recession. Remember, markets go up and down. They're cyclical. If you sell your long-term investments during a downturn, you lock in your losses. It's better to stay the course and let your investments recover over time. If you're worried about market volatility, consider speaking with a financial advisor or reviewing your asset allocation to make sure your investments match your risk tolerance. But don't make emotional decisions based on fear. Stay calm and remember your long-term goals. Short-term drops don't mean permanent losses. Stick with your plan and avoid impulsive decisions. Recessions are part of the market cycle. If your investments are for the long run, don't sell now. Stay focused on the bigger picture and let the market recover. 8. Practice low-buy months. A low-buy month means you only spend money on essentials, no impulse purchases, no I deserve it treats. This practice helps you build discipline and get comfortable with spending less before a recession forces you to do so. Start by setting a budget for necessities and try to stick to it for an entire month. The money you save can go toward your emergency fund or debt reduction, and you'll be better prepared for leaner times. This exercise helps you adjust your lifestyle without feeling deprived. It's about being mindful of your spending and focusing on what truly matters. By practicing now, you'll build habits that will serve you well in tough times and teach you to manage your finances with less. And there you have it, the 8 simple ways to prepare for a financial recession. By taking proactive steps today, you can strengthen your financial foundation, protect your savings, and reduce stress in tough times. It's not about being perfect. It's about being prepared. Start small, stay consistent, and you'll be ready no matter what comes your way. The key is to act now before challenges arise, and over time, those small changes will lead to big financial confidence. If this video helped you, don't forget to like, share, and subscribe for more practical money tips that can help you build a secure future. Thanks for watching and see you in the next video.